It's Friday, July 19th, 2019. This is Hoda, your host for today's webinar. And today's webinar is exclusively focused on one question that came about when our team at the Stock Card were going through our July mid-year portfolio cleanup and portfolio reviews. So if you don't know what we mean by portfolio cleanup and portfolio reviews in July, I will get back to it at the end of the podcast. But first, let's talk about CannTrust and CTST and see what actually happened and why we are worried about this is stock or why our team at the Stock Card is worried about this stock. So as usual, I am going to open up the Stock Card tool and go directly to CTST ticker for CannTrust in United States, and then we can get started on today's conversation. So let's see what really happened. We had a lot of people had CannTrust on their cannabis focused portfolios in our broader community. We also had it as a part of our portfolio focus on cannabis and weed stocks. I guess the green fund, we had this. Let me click on it. So we had the CTST CannTrust as a part of this portfolio. And the question KSD that used to be a very well performing stock suddenly lost significant amount of its value in one day. So if I go to beginning of this month or 1 month period, you see the stock was kind of hovering around $5, and then suddenly on July 7th, so July 6th, it basically went down to 4. And then on July 8th and July 9th and July 10th, it basically just went down, huge decline. As you see on the Stock Card, it had a little bit of a bounce back, but it's basically just hovering close to close to 3, under 3 per share. So from $5 or $6 or $7 at some point it has dropped more than 4%. And you see even today on July 19, as we're recording this webinar and this podcast, it's less than we're recording this webinar and this podcast, it's less than it's already down by 4%. So what really happened, and whether this is an indicator of the company basically losing its luster and whether we need to sell this stock or not. So that's what we wanted to talk about during this today's session. And if you have any questions in the process, please make sure to submit your question. If you are on the webinar, you're listening live, please make sure you submit your question in the chat panel. And if you are not on the webinar live and you're listening to this or watching this on YouTube or listening to this later time, make sure to submit a question either by sending a question on our Facebook group, our private Facebook group, Intelligence. You can log in on your Stock Card account, and there's a little chat box always available on that on our website, and then you could always get a chance to chat live and submit your questions with our team member, and we can answer your question at a later time. All right. So back to CTST or CannTrust, which has been a well-performing cannabis stock for quite a long time, but has been experiencing quite a lot of trouble in the past couple of weeks, starting from July 7th, July 8th, and it's lost more than 50% of its value. So the question is, what happened, and whether it's still worth to hold on to this stock, or is it better to basically just get rid of it? All right. So CannTrust to basically just get rid of it. All right. So CannTrust, first of all, if you don't know what CannTrust is, Let's go through, let me log in. Let's go through this stock, who it is and what they do. So let me just give me 1 second. I'm logging into my Stockcard account so that we can start getting to see all the information available about CannTrust on the company. Okay, 1 second. Forgot my password. All right, let's go for it. All right, CannTrust, we were talking about it, and if you're not familiar with CannTrust, CannTrust, it's a cannabis company, as I said, and basically based on their own introduction, its facility is located at Ontario in Canada, and its brand include Live, Escape, Synergy, and Peak Leaf. And so the description of what they do and what they produce is obviously is very generic. One of the reasons we picked up cannabis, this cannabis stock of CannTrust early on, is for a couple of reasons that I'm gonna go and show you. Is that the company, when we looked at it back in May of 2019, and when we picked it up, it was one of the companies that was trying to significantly diversify and expand the horizon of usage of cannabis in not necessarily just like the traditional recreational use, but in a very new and innovative way. So what I really loved about this company is this concept of brew buds that they're working on, and we talked about it in the editorial section of the stock card. And they've filed for a patent for brew buds. And brew buds, what it is it's basically if you have an Nespresso or if you have Keurig's a coffee pods at home, you know what that means. So you have these coffee pods or tea pods, and then you put them in your Nespresso or in your Keurig's coffee maker, and you press a button and it basically just brews you a coffee or tea or whatever drink that you're interested in. So CannTrust, beyond the production of cannabis for medical use and recreational use, what they've done is they've filed the patent for what's called as brew buds, and brew buds is an equivalent to coffee buds, for coffee or tea buds. So basically, you could put this into a machine similar to your Nespresso, and then press a button, and then you get a cannabis infused drink. So obviously they have a patent for it in the United States, I believe, and they filed for a patent even in China and other countries. So they're going at it in a very wide, globally. And beyond the fact that they're focusing on producing cannabis for medical use, we really love this innovative way of using cannabis for everyday use, and that was one of the most important reasons that we picked up this Canadian marijuana producer. Then what happened is the company basically, all of these cannabis companies are focusing on these days on increasing or expanding their production uh, capacity, right? So CannTrust, they started about a few months ago or a quarter ago, announcing that they've started a new facilities, expanding their facilities in Ontario near Niagara Falls, and they basically said there's phase one, phase two, phase three production, and phase two production. It's something that's already been done. And what they wanted to do by doing adding these production capacity is to increase their production capacity from what it is right now, which is about 10,000 kilograms of dried cannabis per quarter. They want to, which becomes to around 40 or 50,000 kilograms of dried cannabis per year. They want to double that to 100,000. So they said, okay, yeah, we're going through these production schedules, and then we're going to be able to double our capacity, and that would allow us to be one of the bigger cannabis producers in Canada, and even support all of the ancillary markets like the brew buds kind of work and all the other ones around it. So all of that good. But what happened is that on July 7th or July 8th, then a news came out that the company has been producing cannabis in unlicensed rooms in this new facility that we've been talking about. And a couple of companies or like research companies and analysts that basically cover these company in their research, such as a company known as small company called as the Harvest Moon, and obviously Jeffries and BMO Capital and things like that. They basically came out and said, "Oh, we don't trust this company anymore because apparently they're producing cannabis in an unlicensed rooms in this new production." And the stock that we talked about, basically that July 8, 7 and 8 time frame. And since then, it hasn't been able to recover. If you look at the stock card for the company on the stockcard.io/CTST, you see that the market sentiment is extremely negative about this company. And if you click it, I've seen things around short interest. Almost like 8% of the company's outstanding shares are shorted, meaning that analysts are even expecting the company's price going to further go down. If you look at any of other sentiment indicators, money inflow, simple moving average, which compares the 50-day moving average with 200-day moving average, and the RSI index, they're all negative, and they're all showing that market is extremely disappointed and extremely negative about the future of this company. And when you look at the news, it's true because the company of apparently the news, it's true because the company of apparently the management of the company is talking about they've applied for a license in this facility near Niagara Falls, but the license were pending. So they started doing the production, but they didn't have the license for production. That's already a red flag. Number two, that it's very concerning, is that the reason Health Canada or authorities were tipped off by this production is in unlicensed rooms is that some of the former employees of the company apparently had some sort of a beef with the company. It's related to some HR related stuff, and then they basically got mad at the company. They maybe got laid off or fired or left the company on their own. That part we're not clear, but they basically to revenge this whole situation that we're not happy. They cannabis in rooms that the license is pending. And to top on top of all of that, you have to realize that the company from a leadership point of view has had some problems. So in the past 3 years, well, obviously for this company is almost past year, CEO and CFO and president and CEO of the company have all been changed. So this company is a company that has very interesting, obviously, ideas and patent and things going on, but clearly has a management problem. We see the top leadership has been changing. The founder of the company left, which is very rare for this young publicly traded companies that in cannabis sector, most of them are founder led. And this is very concerning. This is the real concerning, and you see that they're basically running the operations of the company in a way that creates such troubles with the employees, and that creates such troubles with the employees, and that force them to go and take these drastic measures. So that's really the story. The company's operational strength is really, really under the question right now. So I'm not worried as much, or we are not worried as much about the stock price decline. But what we're worried about is that the management, especially this new management, has shown a little bit of shaky. I would say, what would you call it? Shaky initiatives. They're not careful about their licenses, and they're not careful about taking care of their employees. And as a result, we are now seeing this government hold on their on their production and on their sell, and that's definitely going to impact this current rate that we've been seeing in the last fiscal year, about 120% growth within their revenue, and 300% growth in their past 3 years. Chances are we're not going to see something similar or anywhere close to that for this current fiscal year, or even this quarter. And even though the company has been struggling with their obviously production and license, they well, not even though, I mean, the company has been struggling with this license and productions, and everything that you see about the company in regards to their operation, it's being now under question with this whole bad management or lack of good management, if you wish. But if you put all that aside, there's still good things about the company. Obviously, the company has no debt, and it's been burning through cash similar to has no debt, and it's been burning through cash similar to all cannabis related companies. But still, I want to go back to those good ideas that we've talked about. They have these all these good ideas and patents and cannabis production facilities already going on their way. So if you are a cannabis producer or cannabis investor, this is definitely one of the better companies that you can invest in it. Um, so there you have it. This is really one of those situations that the reason that the stock is falling, it's some sort of a corporate crisis as a result of the management, and that's a good enough concern for investors like us to basically not to want to stay on the side for a second. We didn't go ahead and sell our CannTrust stock holdings, sort of like on in a penalty box to see what's going to happen. If you are a trader, or those are the people who, some people actually in our community who are trader have told us this is a significant opportunity to be able to buy the stock on the low and then kind of play into the fury of the market. But for long-term investors, if you're a long-term investor, this is really an opportunity. This is really one of those cases when you see sentiment is so negative about the company, you want to be careful about adding more when it's an operational issue like this. But you also don't want to sell it immediately, because the reason the stock is being hammered is this operational issues we said, and then it's a very extremely negative sentiment in the market. The worst thing you can do is to sell the stock at when the sentiment is so negative at the bottom of like the pit, and basically just play into the fear in the market. So there you have it. That's really the story with CannTrust, and that's what we did decide to do. If you have any questions, let me pause and see if there is anything that I can answer right now before we jump in to any other topic that we've lined up for you. Okay, so now let's get to one thing that I promised at the beginning of of today's episode or today's session, is that the reason we came across CannTrust or CTST, and the reason we started thinking about whether we should take a look at this company and whether we should change it, because we were going through our mid-year stock uh, or media portfolio review, and that's what something that we always do twice a year. Every year we do this comprehensive review of our portfolios. And for example, last year, actually, let me show you this. Last year in December, we did a comprehensive review of a portfolio, and that came the annual castaway portfolio. So you see, it was really good because we casted away 11 stocks out of our holdings, and these were the companies that when you look at, since we made the decision, they're basically significantly underperformed the market, almost all of them except one I see here, that we can talk about it right there. And so the castaway process always allows us to eliminate the companies that have shaky stock market, so that we can free up cash if we own them, free up cash and be able to reallocate that money to elsewhere. And that's what we do every 6 months or so. And currently it's July, and we're going through that as a similar or our mid-year review. And we are writing a blog post every week about our progress. So if you're interested to hear about our methodology, about how we go about reviewing our portfolio and what's the step-by-step process we take for deciding which companies to hold and which companies to sell and get rid of, and then how to free up cash in your portfolio, make sure to visit blog.stalkart.io, and then you'll get to read about our methodology and strategy. All right, so we're on top of the 30-minute mark for our weekly webinar. I hope you and podcast if you're for our weekly webinar. I hope you and podcast if you're listening to it through podcast, if you're watching it through webinar. Either way, thank you for joining us, and I hope this CannTrust review was helpful to you. Make sure to join us on our Facebook group, Intelligent Stock Market Investor Facebook group, or sign up for the next webinar on our blog.stalkart.io/webinar, and we'll submit your questions there. And we hope to see you soon and get your questions answered. Thank you and happy Friday.